maintains a non-consensus view. More interest in 4Q180 non-consensus view. Our expectation that the policy rate will be raised by 25 bits per second in 4Q180 is likely to get more confidence. And we think that many analysts may change their view of a rate hike sooner or later. After the MPC meeting yesterday, the MPC meeting on September 19 was in line with our expectations. The directors have signaled more clearly towards the policy rate trend. With more noise, there are now two directors. One for the interest rate increase, and in the statement after the meeting clearly stated for the first time, longer-term monetary easing has therefore been reduced. So our view is that our view is likely to increase by 0.25% in 4Q180. C. To adjust the policy to normal. We wait for minutes to disclose the details of the meeting in the next 2 weeks. There may be a clearer signal. For the first time, the interest rate is raised by the directors. The MPC looks at better private demand in the country. The key issue from our recent meeting is the first issue. The BOT maintained its export growth forecast at 9.0%, although it was stated at a previous meeting that exports were likely. Growth is better than anticipated. We see growth may be offset by trade conflicts, particularly between China and the United States in 2019. The BOT has revised down its estimate to 4.3% from 5.0%. However, the bank is expected to see some positive results from the relocation of some industries to Thailand. The second issue before the BOT was concerned that the crashing Phuket would result in a short-term negative impact on tourism. The number of foreign visitors, 38.3 million this year, but slightly up to 40.6 million this year, is still expected, which means that the crash has limited and short-term effects on the tourism industry. Overview. Third issue is a factor in stronger estimates for private spending in the country in 2018-19. The bank expects private investment to grow further from greater certainty for government infrastructure projects. Even the MPC has revised down government spending projections. Consumption is expected to continue to grow, backed by strong fundamentals. Fourth issue. Bank loans expanded at a higher rate, both consumer and business loans, as stated in the minutes. It has confirmed that banks are more confident of improving their economic outlook and feel that it is safe to ramp up credit. This will increase the real money spin in the economy. Final issue. In the case of the Bank of Thailand's crackdown, the Bank of Thailand said that the current economic situation has lessened the need for monetary policy and said that the monetary easing at the current level will gradually reduce need, which is consistent with our view. Non-consensus. The interest rate will increase 25 bits per second in 4Q180. The 50-50 weight is likely to rise in November or December. In 4Q18, the BOT will hold two meetings, November 14 and December 19. But it is difficult to predict the first interest rate increase in 7 years. Where's the meeting at the November meeting? The bank will consider the August-September economic numbers as well as the U.S. election results. If Republicans lose seats in Congress, President Trump may have lowered his trade-off attitude. But on the other hand, if you have a seat, the situation may be worse. For the December meeting, the MPC will have more time to study the official GDP 3Q18 and some decent economic indicators in December, which may give a clearer picture. For the impact of Chinese import tariffs of $200,000 at the rate of 10%, policy drafters may need time until the December meeting to gather the most information before deciding. However, there are other issues that need to be resolved. Two of them have raised interest rates 2 times to increase policy-making capacity for the future. In other words, raising interest rates will give the MPC the ability to cut interest rates. So the increase in interest rates in November may be a better option than December. Overall, we see a 50-50 opportunity for the first interest rate hike in November or December. to be announced in the next 2 weeks, will give more details about the view and attitude of the MPC and may be a clear sign that the MPC will raise interest rates when comparing MPC views. September and August meeting. Key issues from the MPC meeting are as follows. Foreign economy. Trade conflict could affect export to make exports less. Recent meetings. Exports are likely to slow down. The impact of trade barriers between the U.S. and China, however, has been reversed by the relocation of some industries to Thailand. This reduces some of the impact. Previous meeting. Export and tourism. As the world economy grew and exports are likely to grow better than expected. Domestic economy growth overall unchanged. Last meeting. The Thai economy is likely to continue to grow based on the demand from both domestic and foreign. Previous meeting. The Thai economy is expected to continue to grow based on the demand from both domestic and foreign. Domestic economy price overall unchanged. Last meeting. The average annual inflation rate has been gradually increasing in line with the previous estimate, and core inflation is likely to rise more slowly than previously estimated. The demand for inflation has been gradually rising. Previous meeting. Inflation rate is likely to be close to the expected average of the year within the target, and core inflation is likely to increase slightly following rising inflationary pressure on demand, and inflation is expected to remain relatively stable. Risk overall unchanged. However, there is a risk of competition in the mortgage market that will make lending standards lax. Last meeting. There's uncertainty over U.S. trade barriers that might announce more and countermeasures from major trading partners, including geopolitical risk and higher search behaviors, search for yield, and it should be observed to monitor the exchange rate situation and the impact on the economy closely, and competition in the mortgage market as a result. The lending standards have decreased, and the outstanding supply of condominiums in some areas, and the ability of the SMEs to pay debts, especially those affected by the crisis. Changes of structural factors and business postures. Previous meeting. U.S. trade policy and countermeasures from U.S. trading partners. Expected growth in tourism may be lower than expected, and the geopolitical risk and higher search behavior, and should be observed to monitor the exchange rate situation and the impact on the economy closely, and to keep track of the competition in the mortgage market and the outstanding supply of condominiums in some areas, including household debt. The household debt status has not improved. To monitor the ability of SMEs to pay debts, especially those affected by changes in structural factors and business models.